Hey everybody, welcome to today's webinar. How is everybody doing? In the bottom right, you should see on the right-hand side here of your screen, a Q&A area where you can post questions and comments, and we should be able to see them live. Nice one, there's a few coming through. Guys, give it a little test. Just post in the Q&A area your location. Okay, so it looks like the whole world can see us, which is a positive.
Wow.
So yeah, this is the first time Sean's ever seen one of these, right? A webinar like this on this side of the fence. Yeah. So guys, we're still waiting for some people to come in. We're just shy of the numbers that registered. We've got a large amount of ITPM alumni that are interested in this today, and absolutely you should be. So whether you've done online programs or you've been through the mentoring program after you've done online programs, this should be a very interesting webinar for you. Because when we do webinars like this, you can see really what the pinnacle is of what we do here at ITPM, and it gives you something to aim for, okay? If it's your first time, we do have a lot of first timers on today as well. There's probably going to be some language and jargon that you're not used to, okay? You can obviously ask questions in the Q&A area, but we have to assume a certain amount of knowledge because we can't explain literally everything in this webinar, okay? So try to keep up. If you've got any questions, you can pop them in the Q&A area, and basically whoever's presenting, the other person will answer the questions, okay, as best as we can. And of course, we're going to do a Q&A session at the end as well. Okay, so we're getting close to our numbers here. So I'm going to share my screen, and I've got a little surprise for you when I share the screen. So first of all, let me know if you can see the screen now. So just post in the Q&A area that you can see the screen here. Okay, I think we're looking good. Okay, so the surprise. Basically, when Sean and I decided, okay, let's do a webinar out of your performance in your mentoring program. Think about the timeline. Sean came to Thailand in the last week of April and learned in the classroom with me and Edward Sheck, okay, with the rest of the Thailand group. So we were there for 10 days, and then Sean went back to the US. He's based in Florida. And we were speaking every weekend for 12 weeks. And then we caught up 4 weeks after that. And I was catching up with all the guys 4 weeks after to check on their performance. And he'd made 141 grand on a 400 grand account after 16 weeks, okay? So we decided, okay, let's do a webinar out of this because he's a really good example of what we're all trying to achieve with the students here at ITPM, okay? But when we caught up again 4 weeks later, so initially we caught up after the August options expiry, the monthly options expiry in August. We caught up again after the September expiry, and he actually made more money. So we're not presenting today up $141,000 in 16 weeks. We are presenting up $183,000 in 20 weeks. So by the September expiry, third Friday of September, Sean was up 183,000. So how did he do it? Well, we'll get into that in a while. If you're interested in coming on our next Thailand program, the next one is in April. You'll be in Thailand April 18th to 27th. I'll be in the classroom with me and Edward Sheck. And then you have a choice when booking the program. whether you want to be mentored by me over 12 weeks or Edward Sheck over 12 weeks after you've done the classrooms and gone back home. Okay, so if you're interested in that, just send us a message through the website. It's the same link URL as the remote mentoring program. And speaking of remote programs, we are accepting bookings for Q1 2024. So if you can't make it over to Thailand, or it's too much of a stretch financially for you, that's fine. You can do a remote program. So it's lower amounts in your trading account, say $25,000 in your trading account and above. And everything is done over Zoom every week. So if you can't make it to the Thailand program, or it's a bit of a stretch financially, you can do the remote program. Okay, let's talk about my background first. I graduated from Manchester University in economics in the year 2000. I was hired by Goldman Sachs in my final year at university to start when I left university. So I started in June 2000 and was sent over to New York like 3 weeks after my final exam. So worked at Goldman in London, so returned to London after the program, worked on the Pan-European equities trading desk with a dual mandate, prop trading and market making. So that was before the 2010 Volcker rule, where prop trading after the global financial crisis was basically petered out at investment banks. So not allowed to prop trade anymore. So my career was before the Volcker rule. So basically every trader in Europe and the US had a prop book, and in Asia as well, a proprietary trading account. So dual mandate, prop book and market making. Moved to Lehman Brothers in 2004, then to JP Morgan in 2006, left the investment banking industry in 2007, traveled the world, made a TV show in the UK after traveling for a year, then went traveling again, and then moved back to the UK, decided to go it alone and set up ITPM. 2013 is really when ITPM took off because we put everything online. So it went global, and then to get more tax efficient, ended up moving to Singapore and setting up the current family office investments and trading infrastructure. And I'm currently living in Phuket, Thailand, where I am now. So Sean, quick snapshot of his resume here. He's obviously going to go into it in a bit more detail, so I'll leave that to him when he presents a bit later, before he goes through how he made his money. So a bit of context here, guys. Let's talk about, especially for the first timers who've never experienced what ITPM do. Okay, bit of context in what we're actually trying to achieve from a trader mentoring program. So when a guy like Sean applies for the mentoring program and he comes on, and he's done the online programs, and then we're now speaking, and he's got a live trading account. What are we actually trying to achieve in a mentoring program? So the first thing is that he's been through the online programs, and that's a minimum level of education that's required to start trading live and be mentored at ITPM with real money, okay? You've got to have done the IPLT, the Introduction to Professional Level Trading, the Professional Trading Masterclass, PTM video series, and the Professional Options Trading Masterclass, POTM video series. Those are the 3 programs that you need to have done to enable you to be on a mentoring program, okay? Now, when you book a mentoring program, if you've got enough time up front, so you need like 2 or 3 months, you obviously get all of these programs included on the mentoring program. So even if you're working full-time, you've got a full-time job, if you've got 2 or 3 months in advance, you can book your program in advance and get your programs done, open your trading account and just start the program, okay? So you jump on Zoom with your live trading account and your program begins for 12 weeks, okay? If it's the Thailand program, you come over to Thailand first for 10 days, then you start the 12 weeks. So what we're trying to do is implement all the information from those 3 programs for real, with real money in a live trading account. And what we're really trying to do over a program is get the retail trader who's come to us, finish the online programs, going on a mentoring program, by the end of 12 weeks to be highly competent to a professional trading standard in a multitude of areas, okay? So first of all, becoming a real expert on knowing the macroeconomic environment, getting a very, very high level of consistency in the quality and the quantity of trade ideas that they're churning out every week, okay? Structuring, we're very heavily in options, okay? Structuring individual trade ideas optimally with equity options, okay? So really teaching the guys when they're looking at all the choices of different structures that they have, which one through a process of elimination is the best one or the most optimal, okay? How to build a long-short equity options portfolio properly to a professional standard using call and put option structures. All the ways that we try to put the odds in our favor. So if we get the probabilities in our favor regularly, we're probably going to make money over time, okay? Different techniques of risk management. So when we're sitting down every week and going through every single position, teaching how to trade out of positions, whether they're winners or losers, and doing this optimally from a risk management perspective. Overall, implementing winning trading habits. So in execution, entries, and exits. So retail traders often, more often than not, sell everything at the bottom and buy everything at the top. They're trading on price and trading on fear and greed and mostly emotion, okay? We do the opposite. Professional traders do the opposite. We have a plan going in, we have a plan going out, okay? We're implementing winning habits and teaching the guys to have winning habits, okay? We buy somewhere near the low. We're not going to get the low ever, but we know that, but we buy as close as we can. We're patient. We trade out and we sell somewhere near the highs. We know we're not going to get the highs, but we try our best to get best execution on entries and exits, okay? And we're trading the volatility. And then the real killer, which sets the men apart from the boys, okay, is managing the business properly and achieving the high level trading statistics. So it's all the things that you have to do once you know how to do everything else, how to manage your business properly on a week-to-week basis, okay? What are we trying to achieve in terms of stats? Well, this is what it looks like. We are absolute return traders. We're trying to make as much money as possible, but always cognizant of the risk that we're taking to achieve that return, okay? So we're not cowboys. We are in control of our risk, but we're trying to make as much money as possible, okay? Regardless of whether the market is up, down, or sideways. So we're absolute return and we're targeting 50 to 100%, but we can make more than 100%. And obviously these are on retail trading account sizes. So this is $25,000, 50, 100, 250, in Sean's case, $400,000 in your trading account. This is not $1 billion at an institution targeting 50 to 100%. That's completely different, okay? With retail trading account sizes, we target 50 to 100%. Win-loss rate, we're targeting 60-40, but ideally we want a bit more, 65-35, okay? The money you make on your winners divided by the money that you lose on your losers. Minimum, a ratio of 1.5. This is called your R score. Ideally, we want more closer to 2, okay? But that's our minimum, 1.5. Sharp ratio, minimum 3. So the risk that we're taking and the return, it's the return over the risk that we're taking, okay? So if we're taking 25% risk on the underlying portfolio, we're leveraging that up with equity options and we get 100% return. We've got a Sharp ratio of 4, okay? And then typically average days in a trade, when you look back over a year, the first year, we're looking at around 20 to 25 under normal volatility conditions, but there can be some acceptable variation if there's moves in volatility, okay, up or down. Now, managing the business properly, what are we trying to achieve here? Well, once a guy like Sean comes to us and he's learned all of the stuff that makes him competent in terms of trade ideas, structuring, risk management, etc. It's all about this. It's all about managing the business. Your job as a trader is to create that equity curve, okay? Now, you're never going to get the ideal line, ever. The ideal line is a 45-degree line left to right, okay? You're going to have variation around it. But your job is to book profits. It's not your job to sit and watch the screen and hope that you make more or lose less, okay? You've always got to be active and you have to be booking profits. So when you look at something like this, when you look at the screen and you say, okay, this guy here started on $100,000, okay? And the first booking was $10,000, okay? What does that look like? Well, if you think back to our R-score, where we say minimum 1.5, but really we're targeting 2, that might be in the first month booking $20,000 on their winners and $10,000 on their losers, which means they get an R-score of 2. And yes, in that situation, there's losers, but the equity curve is going up, okay? This is what you have to do as a trader. You've got to make that equity curve go up. So the decisions that you make when you're managing your business are very, very, very important. You can come up with great ideas. You can come up with great ideas, have average risk management, okay? Your structuring can be okay, so you can tick those boxes. Trade idea, quality and quantity. Structuring, decent. Tick the next box, decent at risk management. But if you make bad decisions for your business, you're screwed because the equity curve doesn't go up in the way that we need it to go up, okay? And this is your business as well. You need to have good stats, okay? Over time, you need to manage your stats and make sure they're good. Now, before I hand over to Sean, I want to show you something. I asked Alan the other day to send me, I thought it would be quite interesting, to show you the full evolution of a retail trader that comes to ITPM. I asked Alan to send me Sean's application from 2022. So we actually send out questions via SurveyMonkey as a survey to collect information on the people applying for mentoring programs. So if you do apply for a mentoring program, you will get these questions from us and you have to fill it out, honestly, okay? And it gives us a really good idea of what we're dealing with. So you should be able to see this on the screen now. Let me know if you can see it. This will be very interesting to look at because many retail traders will see things on this page, like things that happened to Sean in his background when he was trading, that are very, very similar. And we see very, very similar things from retail traders over and over and over again. So you'll see things that are very similar to your own situation probably, okay? So we have the admin stuff out the way first, and I've hidden, obviously, Sean's name here. Which mentor do you want to complete your Thailand mentoring program with? Well, initially he put down Edward Sheck. So we probably ended up speaking when we do our Zoom call to discuss the Thailand program. Oh, and by the way, he applied August 1st, 2022, okay? So just think back to the year that this guy has had. It's insane, right? He applies, makes this application, and please make note of these responses to the questions a year ago, okay? He applies on August 1st, 2022, and then a year later, we're agreeing to do a webinar because he's made so much money, okay? And he's done it really well. Okay, so application 1st of August, 2022, applying for Edward Sheck. We end up speaking on Zoom, and then we decide, okay, Anton, I'll mentor you. Why not? Okay. Question 4. Have you ever traded in a live retail trading account with your own money on the line? Okay. And tell us what your performance was. You won't believe how many people can't answer this question because they don't even know how much money they've lost, right? When we end up doing the calls on Zoom to discuss mentoring programs, I have to like tease the number out of people usually. But Sean was honest. He said, yeah, I was down $150,000 overall before taking your online programs. And after I took the online programs, I made 20 grand. So that's pretty good. the online programs obviously pay for themselves and more there as well. And he's basically contributing that $20,000 to a mentoring program. Okay. So it's all kind of paying for itself here. What's your mix of fundamentals, technicals, and price action in the past? Typical answer. We always see fundamentals in the minority, right? So here it's 50-50, but usually it's in the minority. As you can imagine, retail traders are very, very heavily focused on technicals and price action, okay? Next question. What's your time horizon? In the past, he's 3 days to 1 month, okay? So 3 days, very, very short term from professional trading standards. 1 month is our minimum when we enter positions. What instruments have you traded? So all of the above. What asset classes, instruments, all of the above, including options. Sorry, including futures. And then, yeah, this one is, so that's asset classes, and then this is instruments. So what instruments have you traded? So futures, as you said, long short equities and ETF pairs, but probably not doing it in the way that professionals would do it, because you'd actually have to build a proper portfolio to do that. So my guess is here, he was probably having 1 or 2 positions on rather than 10, 12, 16, right? Forex pairs and also trading crypto. And then he's been low leverage. Next question. Have you ever been taught by a professional trader? Well, he says he's had an instructor, but the guy never worked at an investment bank or a hedge fund. And he was taught, he doesn't mention who he is, but he obviously had some sort of online program with videos, okay? So basically, he's a retail trader. He's never been a professional trader. We see this all the time. So when we ask people this question, have you been taught by a professional trader, or have you had an instructor who's a professional trader? Vast majority of people say no. I've had an instructor, but they weren't a professional trader. So this is a very typical answer. Next question. Have you read any books? And this is kind of a trick question that we put out there, because we know that no books are going to turn you into a good trader. There's no information that books can help you to trade, okay? Profitably as a consistent trader over time. So this is kind of a trick question, because what we're trying to do is we're trying to assess how brainwashed the retail trader is, okay? So here you can see, and this again is quite a typical answer, because he's just reeling off a bunch of technical analysis and price action books, okay? So we've got technical analysis explained, Japanese candlestick charting techniques, and trading your gut. So yeah, oh, and also we've got the Fibonacci analysis. Okay, again, this is all very, very typical stuff. When we ask that trick question, we always get a list of all the most popular crappy technical analysis books. And when you think about this, okay, and put it into the context of what his P&L was before he came to ITPM, he's heavily into the TA books, okay? He's done an online program, not from a professional trader, but a retail trader. He's traded all these instruments where he's experimenting with technical analysis and price action. And he's getting nowhere. He's got his mix of fundamentals, technicals, and price action as 50-50. And he's down 150 grand. And from his background, and you'll see when we go over to his resume, he's been trying to do this for 20 years, for over 20 years, right? So obviously we do things very, very differently at ITPM. I'm going to hand over to Sean now. So Sean, I'll stop sharing the screen. And then I just need you to share your screen. And guys, Sean's going to take you through how he made his money over the mentoring program and what he learned.
Hi, everyone. Thank you, Anton. I'm Sean from sunny South Florida. what I want to do is I want to go through these next few slides really quickly because I want to spend more time on showing you the actual trades. So my background, I graduated from the University of Chicago with a degree in quantitative economics. And my first job out of college was in 1995 as a management consultant working with Robert Charles Lesser and Company. Over the next couple of years, the dot-com bubble was really going off. I'm sure some of you can remember that. And all my friends were into stocks. That's all they ever talked about. And of course, I got the bug too. And I got the smart idea that, you know what, stocks are moving up and down about $1.25, $1.50. And let me pull out maybe 25 cents out of that, maybe 3 times a day, and I could make $100,000 a year. Yeah, very smart. Very stupid and very naive because I went bust very, very quickly. So then I said, okay, let me go work for a brokerage firm and see how I can learn from a professional manner. So I went to work for Merrill Lynch and became a financial consultant, which is basically a fancy name for being a stockbroker there. And that was a real disappointment. Of course, I got my Series 7 and my Series 66 licenses, but all that really taught me was how to put in orders for clients into the system. I didn't learn any type of strategy, trading, investing, nothing. I was just basically taught to push clients into, these are high net worth clients, to push them into either mutual funds or partnering hedge funds. Very disappointed. A couple of years later, I left and I decided I want to go work for an institutional firm. So I was working for Trust Company of the West in Los Angeles, TCW, as you know. It's an institutional money management firm. I started out in the back end in the compliance group, and then my group got spun out to Mellon Trust. So I was doing institutional compliance and reporting over at Mellon Trust. A few years later, I moved to the public sector where I'm doing financial work. And I decided to start trading into futures. And Anton had pointed out that I had found a technical analysis coach to help me through that. And basically, it was boom, bust, not making any consistent money. Fast forward to 2020, we're in the COVID lockdown, and obviously what I was doing was not working. I'm flipping through YouTube, and there I see Anton and I see ITPM, and this seemed like this was the answer. This is what I was looking for: professional, institutional type education. So I quickly ordered the PTM 1.0, the POTM, which is the options course, and the PFTM, which is the Forex course. And I literally devoured that information during lockdown, the COVID lockdown. In 2021, towards the end of 2021, some of my non-financial investments actually ended up really panning out, allowing me to retire at the age of 49 and ended up moving to Florida. And you actually saw the application. By the time around August, I had made about $20,000 using the PTM process. By the end of the year, by December, it was actually quite a bit more. I was actually up 36% in a bear market using the PTM 1.0 coursework. But really what I was looking to do was manage a 7-figure portfolio, because that's really what I wanted to do during my retirement. And I knew that I needed one-on-one mentoring and instruction. And that's when I signed up for the Thailand classroom, followed by the 12 weeks of mentoring. Now, this screen right here, before we began the mentoring, which started on April 20th of this year, we had to set up a brokerage account, a fresh brokerage account, and fund it. So as you can see right here, this is a brand new interactive brokers account that I set up. And on the bottom here, you can see that I deposited $400,000 in this account. During the next 3 weeks, there was a little bit of interest earned. That's why you see this going up. On the trading side, track records. Now, I returned back to Miami on April 30th, and my first call with Anton was the following Saturday, which was May 6th. So the Friday before, this is what the starting capital with the accumulated interest here, this interest plus this accrued was $401,486. Fast forward to September 15th. This is what my realized profit was using everything that I learned from Thailand and the subsequent 12-week one-on-one mentoring with Anton. $185,328 minus approximately $2,000 in commission for a net profit of $183,328, a 45.66% mind-blowing return in 4.5 months. You see more detail on this performance here, but we're going to go over this actually in the spreadsheet, so I'll talk about this later. Here on this page, what I wanted to show you was the actual raw data, the data dump in the account. So what ends up happening though is when you put on a trade, for example, let's say 50 contracts, it doesn't always get executed in one shot. So it gets executed in dribbles. First 10, 5, 8 contracts, 7 contracts, and then it adds up to 50. So you see a lot of individual line items. So this was going on for pages and I couldn't fit all of this in. So I screenshot the first page, put this here, and then I went to the last page and I screenshot the last page, but it's showing you $183,228.77 net profit by the September 15th expiry. And this is the equity curve, right? We started out with just a little bit over 400,000. First trade being on the Monday after the call on May 8th, and then really building that equity curve trade after trade after trade using the ITP process up to just around 586,000 by September 15th. Okay, the good part. I know I rushed through that, but now I want to show you the really good part. I'm going to show you the actual trades. Okay, so we saw this part here before. Starting capital, 401,486. I took a total of 62 trades, and out of that, 45 trades were profitable, 17 trades were a loss. Nobody gets, not even the best traders get 100% right on all trades. So accumulating losses is just part of the program. So if we look here, all of my wins across 45 trades added up to $343,740, and all of my losses added up to $158,411 for a total of $185,328. Subtract the trading costs, and this is what you get as the net profit. This is the net realized, and this is the R score that Anton mentioned a little bit earlier, 2.17. All this really means is if you take my total dollars won and you divide it by the total dollars lost, you get that. So what I'm basically, for every $1 I lose, I'm making $2.17 in profit. And if you look at this 45 and 17 trades across 62 trades total, that breaks down to a 72.5% win rate and a 27.42% loss rate. And here you see my average trades in the current market happen to be around 18 days. Some trades are much longer, other trades are a little bit less, but we're really trying to go for that 1 month to 3 month time period, because that's where the volatility sweet part is, where we can maximize our probability of making big money. Again, I repeat, big money. And this is what I want to show you right here in the spreadsheet. These are all the trades that I've logged in, and they're actually ordered by the exit date. So one of the first trades, I'm going to show you a few of the trades. We won't go over all of them, but a few of the ones that really made a profound impact on my thought process and expanded my mind. So the second week on May 15th, I'm going to scroll here to the left. I entered into a spread trade with Celsius Holdings. Now, a spread trade is basically where you go long a particular contract and you simultaneously go short another contract. And the reason we do this, it allows us to be agnostic and puts the probabilities of winning in our our favor. So for example, if you've got a long call and a short call, if the stock drops, you make money on the on the short call. If the stock goes up, you make money on the long. So usually in most cases, one of the legs will be profitable, the other one will be a loss, but you look at it together as a single trade. So the Celsius holding trade, look at this, guys. I was in there for a total of 3 days. And in 3 days, I made a net profit of $9,440. In 3 days, blew my mind. That's $13,940 minus $4,500. Similarly, if we look at some other trades here with, like, for example, Match.com, another 3-day trade. Now, guys, I'm not focusing on 3 days. Remember, our time period is 1 month to 3 months, but it was just giving money. Match.com, if you're familiar with the company, they're the ones that make the Tinder dating app. So this was also purchasing call options, and they both have the same strike here. So this was actually a calendar spread versus a diagonal spread that you saw in the Celsius, where they were different strikes. Look at this, guys. Entered on June 12th, exited on June 15th, 3 days for a profit of $5,950. Mind-blowing. One thing that I wanted to tell you, though, was at this point, I was getting a little cocky because things were, making really, really quick money. So I decided to go off script and off the PTM plan. I didn't check in with Anton, and I started doing some of my old crazy, excuse my language, shit. I want to go back up here. I told you about this very successful Celsius trade here, but then immediately, right after exiting on May 18th, I entered another trade, completely not following the ITPM procedures, not checking in with Anton. I just jumped into this. I didn't plan properly, right? Anton gives us certain spreadsheets where we plan out our trades, look at different scenarios. Didn't do that. I don't know, just got really cocky and entered this trade. It's again, long short spread, May 26th short, June 23rd long. First problem right here is these are non-standard expiries. We only trade the regular standard monthly expiries, not the weekly expiries. So mistake number one. Mistake number two, having jumped in without a plan, the stock went against me. Of course, I made some money on the short, but look at this, guys. I immediately bail out of this, got in on the 18th and got out on the 18th. 0 dates. Yes, I made a little bit of money, but I left my long completely naked. This is not how you trade in the IPTM process. This is me winging it on. Long story short, basically, I set myself up to potentially lose as much as $30,000 on this long. Terrible. On the next call, Anton chewed me out, and we started coming up with a plan on using a repair process that you learn during Thailand and subsequent monitoring. So I was able to repair that trade here with another trade. Now, in terms of risk management, we never exceed 10% of any given trade. So we start out with around 6.5%, 7%, and we leave that remaining 3.5% for possible repairs. So with Anton's guidance, I ended up doing a repair trade, and the repair long paid out $17,920. And of course, this is the short side spread for a net profit of $10,120. The stock finally ended up going in my favor, and I was barely able to squeeze out a gain on the bad winged decision. I was able to get out for just under $1,200. But really, the repair that Anton taught me really saved me. So if we look at the net profit between the mistake and the subsequent repair, I still made $8,320. So mind-blowing. I want to come back down to the Match.com trade that I showed you. That was only 3 days. And I'm going to scroll a little bit here to the right. And I want to show you the cumulative profits earned. Now, this trade was on June 12th and June 15th. I want to remind everyone, my first trade right after my first call with Anton was on May 8th. This is June 15th. Just a little over 1 month later, I'm up $40,190, and my cumulative portfolio is up $441,676. This is despite me screwing up and having to repair a trade, but in just a little over a month, I'm up that much. At this point, I'm really getting excited, but now I'm making sure I'm diligently following the ITP process. I'm checking in with Anton and really paying attention to the guidance and instruction that he's giving me. Of course, I'm doing my own research on the trades. I present him the ideas. We talk about it. We create a plan. We look at probabilities and we evaluate structures. And then I go on and put on the trade and I manage. I want to quickly show you guys some other trades that I put on that, again, also paid off very, very handsomely. Here's Lattice Semiconductor. This is a long, but if you look up, I'm moving my cursor up here. This is the short side of Lattice Semiconductor. On the short, I collected $5,215, but on the long, the reason they're not next to each other is because I closed the short much sooner and I held the long for much longer. So I'm back down here to the long and moving here to the right. Got a 64.26% return, $19,170. Guys, this is profit on the long, plus I earned the $5,215 on the short. This is the holy grail of situation where when you put on the spread, you make money both on the short because the stock went down temporarily, and then you make money on the long because when the stock reverses and goes up. Best case scenario, that's $24,400 profit right there. So guys, this is June 16th. Look at the profit here on the right, okay? Actually, it's about the same because there was another trade that I showed later. Let me show you some more trades that I was able to do. Match.com, again, guys, when you do the fundamental research, you understand what catalysts are going to move. Those catalysts aren't going to disappear right there. So once you exit a trade, there are opportunities to re-enter that trade, waiting patiently for that right opportunity, and you can make money over and over again. So look at this on Match.com. Entered the trade on June 20th and exited both the long and the short together right here on July 13th. Held for 23 days. $22,375 on the long and offset by a negative 6,803. So the net profit on that trade is $15,572 over 23 calendar days. So now basically a month has gone by. I'm going to scroll here to the right. Look at the profit cumulative, $64,445. My portfolio is now up to $465,931. And this, using the ITPM process, doing the fundamental analysis for idea generation, running it through then the technical analysis to make sure I'm not too early or too late, and putting on the right options structures, I just keep making more and more money. Look at this. Datadog, this wasn't a big winner, had this trade, I'm going to scroll here to the right, for 3 days. And in 3 days, I made $3,610. Not bad. That's like $3,200. That's like $1,200 a day. Below that, notice Lattice Semiconductor. Again, it's all part of that trade. Earlier trade, we got out at an opportune time. We waited patiently, and I jumped in again when I saw another opportunity to get in. This trade I held for 27 days. And the net profit across the spread here is the sum of these two, 12,787. So you guys are seeing, it's like the ITPM process is basically like a cash machine where every few days I'm able to make tens of thousands of dollars and move them from the unrealized to the realized bucket where I'm actually taking that money. A few other trades here. Look, Z-scaler, if you notice here, long short pair, held that one for 22 days and made a profit of $7,490. And here I'm going to scroll over to the right. Look at that. I'm already up $101,415 just by July 18th. So that's from May 8th through July 18th, up $101,415 realized in the pocket. My portfolio is now over $500,000. And I'm just going to scroll through and let you see how the cumulative just across all these other trades is just going higher and higher. Look at that, 104. I had a write-off, and I'm going to show you the bad trades here too, because you got to see the bad side of it. This went down, but continuing to follow the process. Look, back up to 106, 103, 128, 143, 150, 161, 172. The numbers just keep going. I want to show you one particular point here. And the reason I've highlighted this was this represents July 31st. So that's technically the completion of the 12 weeks. So how did I do in 12 weeks? $95,534.46 before commission, cumulative profit. Okay, so this is the completion of the 12 weeks. And now I'm on my own. How did I do after the mentorship program, continuing with diligently following the ITPM process and everything Anton taught me during the one-on-one mentoring? So you can see I'm scrolling down here, going down. The numbers are just getting bigger, 172, 180, 182. So by the end of the September 15th expiry, before commission, I'm up $185,328 in profit. And what this means is I made $95,000 during the 12 weeks, and I made another $89,794 in literally a month and a half after my mentoring ended, right? Mentoring ended July 31st. This is September 15th. So August, half of September. So a month and a half, another $89,794. I mean, I am just so amazed that I've gotten to this point with what Anton has taught me and what I've learned in both Thailand and on the one-on-one mentoring. This is a blessing, and I'm so excited. I really couldn't begin to express to you guys how thrilled I am and excited about the future. Now, I promised you guys that I would show you some of the bad trades here as well. So I'm going to scroll up back towards the beginning. Okay, and if you look down here, I'm scrolling down. Do you see this negative 28,200? This was my first write-off in my first full expiry. So the May expiry I was only in there part of it, right? I started on May 8th and it ended on May 19th. So June 16th was the first full expiry. This was a stock called Axon. Pardon me while I get rid of that. Axon. And I made money on, if you look at the very top row, I actually made $6,840 on the short side, but the stock never recovered, and I lost $28,200 on on a write-off. I tried to use the process, repair process, that got me an additional roughly $3,000 profit against that loss, but I never fully recovered. Scrolling down in the following month, in July, I had another write-off. So basically every month I'm getting these big write-offs that I wanted to show you. So here, in July 21st, I had the SQM right here. That long, unfortunately, did not pan out, and I lost $27,368. I didn't even bother repairing it because I no longer had conviction on the fundamental side of it. So why throw any more money into it? So if there's no conviction, it's not worth it. Very important thing to remember, guys. You've got to have strong conviction from your fundamental analysis. You've got to know what catalyst is going to move that stock forward. And you learn this in the ITPM process. So I also had a second write-off here on July 31st for $23,132. Not a full 100%. I just decided to bail out a little bit early because I wanted to manage the cash flow and smooth out my equity curve. So another big loss. I'm going to scroll down and show you. Look at this one, guys. Valero, VLO, oil company. We saw oil prices were going up in the summer. I actually, initially they started going up after I got into this, and I was actually short a put. So if you notice this, I was short the put, and the oil prices were going up in the summer, so it was going against me. $31,520 was my write-off, guys. $31,520. Again, I did not repair this because I no longer believed in the fundamentals. We heard about Russia and Saudi Arabia tightening supplies. Didn't make sense to throw any more money into this. I took the write-off. And I believe that was the last major write-off. Why do I show this to you? Guys, look at this. Okay, on this next page, you saw this chart before. This is the equity curve, right? Look right here. So this is going up, going up, going up. You see this big boom drop right here? That's a write-off. You see this big boom? That's a write-off. This is a write-off. This is a write-off. But as long as you're following the ITPM process, you are generating quality ideas. You're running a balanced portfolio with low correlation between the process, the way Anton and IPTM teach you, the other ideas in the portfolio. Again, you're a portfolio trader. You're not an individual position trader. Managing the portfolio, your other ideas quickly bring you up. So write off, other ideas lift you up. Write off, other ideas lift you up. Write off, other ideas lift you up. And again, write off, other ideas lift you up. You're able to generate this near 45 line, raising your equity curve from bottom left to top right. So this is why I wanted to show you both sides, the longs and the shorts. Now, actually, there's one position I really have to show you guys here. This actually made me sad, but I want to show you the potential of what the ITPM process can do. And this stock here is called, where is it? It's Chewy. And here we go. I received a credit higher up, but I wanted to show this particular trade to you guys. Around July 10th, guys, later on when you get a chance, look this chart up. And there's a reason why I'm telling you. The stock was around 37.5, 38. The company fundamentals were, excuse the expression, shit. Earnings growth was slowing down. Revenue growth was slowing down. Their US business was not in good shape. And yet these fools are out trying to expand in a new venture in Canada. They're not fixing their home base first, and they're already out expanding. So I was in this trade for 29 days, and look, $21,175 profit. Plus, if you look at the top row here, I earned an additional $2,600 credit on the short side as well. So roughly around a $23,000, $24,000 profit. But why am I showing you that this is kind of sad? I looked on the chart. I saw support around 30, 31. So I thought the stock would drop to around 30, 31 and possibly pop back up. And I got out. Well, if you look at the chart, that stock dropped all the way down to $18. In fact, it's at an 18 handle right now as of yesterday. You see this $606.63 trade that I sold out of? I bought at $392 and I sold at $663. Well, right now, as of yesterday, it was $18.70. This is what I missed out on. I'm typing this in so you guys can actually see this. $115,000. I missed out on a six-figure payoff. But I want to show this to you that if you follow the ITPM process, every once in a while, you get these big moves. Once or twice, or, if you get 2 or 3 of these a year, that can really push your account up really, really big. All right. Now I'm going to take you guys back to the PowerPoint and we'll kind of briefly summarize some other points on the expiries. Okay, so we should be back at the PowerPoint presentation where we left off. So the next thing I wanted to do was summarize the different expiries, right? I showed you the trends, but let's look at it expiry by expiry. The first expiry was the May 9th expiry. Not really enough time, right? Because as I said, May 8th is when I started trading, but I had that first big winner with Celsius, and I was generating additional credits and just building up the books, right? You can't immediately put on a 10 to 12 stock portfolio. Next expiry, June 16th. This is where I went off and winged it on my own, abandoning the process. And that was going to be a big disaster. But getting back to the ITPM process, doing a proper repair, literally victory taken from the jaws of defeat. We saw that Lattice and Match were great winners. I restructured the Axon trade and I still ended up making money, guys. It was something like 40,000, 45,000 that month. So it still was a profitable month despite that. The July 21st expiry, I went back into the same positions again for another opportunistic moment, made money on LSCC, Match, Zscaler, and still had another write-off, but ended up making another 40,000 plus that month as well. Still had a profitable month. August, I did not show you guys the Zion trade. This trade had me super excited. So as you guys remember, earlier in the year, we had the banking crisis. We had Silicon Valley Bank and 2 other banks collapsing. The Federal Reserve and the US government came in to stabilize the markets. Bank stocks had dropped. And once they stabilized and it looked like the government had control over the markets, keeping them from falling, I was able to get into Zion Bancorp when it was around $27. And as the market was recovering, this stock ended up making approximately $36,000 profit. Guys, that just blew my mind. The reason that blows my mind is my first job out of college back in 1995 paid me base salary before bonus only about $30,000. So making $36,000, I made more in one trade in just over a month than I did that entire year working on that first job. So mind-blowing. We saw Celsius and Zscaler again continuing to pay, and I showed you how although I made money on Chewy, how I missed out on the big move because I bailed too early. That's actually a theme and a weakness in my trading that Anton, when we reviewed the stats, he actually pointed this out to me. I'm not staying in my winners long enough. The reason I'm still making the big money is because my winners are happening more than 70% of the time. So that's one thing I have to work on. Raised again, more credits. And we moved to the last expiry, the September 15th. This was a very, very difficult month for me to trade. Volatility was basically down. If you guys pull up a chart of VIX, you see VIX around 12.5, 13, 13.5. And there's all the, inflation no longer seemed to be trending down. That was uncertain. And there was a lot of uncertainty what the Fed might do because of data. So it was very, very difficult to make money on this. But yet I was able to generate nearly $31,000 worth of credits to make that still a profitable month. And I ended up making a profit on this Trenzio PLC trade. This was what we call a tail risk trade. Just to kind of briefly summarize, tail risk trades are basically when you have a situation where it's low probability, either on the bullish or bearish side. It's not your main framework of what you think is going to happen, but you still hedge against it. If it does, it ends up paying big, 4x, 5x or more. And Trenzio paid off. Basically, bottom line, the month, despite all the low volatility and uncertainty and difficulty, ended up making something like around 45,000, give or take, in that month. How to trade to a professional level standard. So what I did was, Anton, a lot of the things that he would say, I have a whiteboard here on my right against the wall, and I really wrote down all the important things that stuck to me. So, like for example, in this first bullet point, what Anton is really saying is we want to be agnostic. When I gave you guys the example of we go into a trade where we're going both long a contract and short a contract. So we don't really care that in the short term, whether the market goes up or it goes down, we make money both ways. And that's how we put probability of winning in our favor. We use structures, and we also organize our portfolio in a long, short book. So regardless of where the market goes, we can be agnostic and we're going to make money. The next bullet point is basically what Anton is saying is the market already knows the consensus. By the time you read a Wall Street Journal article or you see something on Bloomberg or CNBC, it's already known. The professional traders have already taken all of the meat off the bone, and the reporters are the last ones to actually report on it. So if you're trying to trade on the news, you're going to lose money. Trade's going to reverse on you. So the idea is to be able to do your own independent research and find out what is going to move the needle in the future and position yourself now for it. Third point, retail traders trading price. What Anton taught me is, look, you generate your ideas using quality fundamentals. You take a top-down perspective first, you look at the macro, then you look at bottom-up perspective where you're looking at individual companies and their particular fundamentals, and then you structure options trade in a specific way, increasing the probabilities in your towards your success, and you create a plan. You know exactly what you're going to do if the stock moves this way or if it moves that way. You're actually trading the plan. The next point is basically continuing on that. You are trading probabilities and you are trading basically your plan. If you go off the plan and you have to pray for something to work like I did when I winged it on that Celsius trade and I went off the plan, I was praying, I was sweating. That's not where you want to be. Professional traders do not put themselves in that situation. They trade their plan. They know what they're going to do no matter what happens in the market. So there's never a point of having to panic or hope or fear. I also, again, learned how to raise a lot of credit. I mentioned that you're doing both a long and a short spread trade. So on the short side, you're generating all these credits and you're putting the odds of winning in your favor. And those credits add up and can actually offset the losses that you make. Overall, again, I learned how position sizing, as I mentioned, never exceeding 10% of a portfolio, having staggered expiries, That means basically not having more than 3 options expiring in any given month, and not having all calls or all puts in that same month. So staggering all of that and making sure your ideas are uncorrelated in your overall portfolio. That means if you've got a stock portfolio of 10 stocks, you don't throw in 3 or 4 tech stocks, right? Because if interest rates jump and your tech stocks go down, 4 stocks in your 10 stock portfolio, your portfolio is going to take a dive. So you create a portfolio of low correlated ideas. Basically, when I started this process, what I realized was everything that I learned before did not work. And what I wanted to do was find a mentor. Basically, you abandon everything you know and you put yourself in their head and you look through their framework and through their eyes, and that's how you really learn. And that's what I wanted to do. I sought out Anton as a successful professional trader, and I wanted to put myself in his head and see through his eyes. And that really helped. And, Anton previously discussed, and I showed you from my trades that we're looking for at least a 50% annual return. So if you saw I had a lot of winners in the spreadsheets, if all of my winners and all of my losers canceled each other out, just the credits by themselves could allow me to potentially make a 50% return. So that's key. The ITPM process is key in terms of planning, risk management, and being successful. And when the losses happen, that's okay. As Anton would like to say, it's just a trade with that's a row in the spreadsheet with a plus or minus against it. Not to get caught on it, just focus on the plan and keep going. The key here, again, generating quality fundamental ideas using the, again, top-down, bottom-up process that you learn through the PTM program, as well as in Thailand and subsequent mentoring. You then filter that out with technical analysis to make sure that you're not too early or you're too late in that trade. And you also use that for risk management. The trade is not too long in the tooth. And then you structure it in a proper options portfolio that increases the probability of you winning. As I mentioned, the long and the long position and the short position that you do together as a spread maximizes your chances of winning. And again, Anton points out the importance of really focusing on your statistics. I need to let my winners run. Just imagine if I had let that Chewy trade run, $115,000 I would have had in that extra in this account. My account would have been much, much higher. So following the statistics and knowing what your strengths and weaknesses are very, very important. And this is where I'm going to hand it off to Anton.
Right. Cheers, Sean. Okay. So very good summary from Sean there about how he made his money. And obviously, I've been answering a lot of questions in the Q&A area on the right-hand side. So feel free to continue putting questions in the Q&A. And Sean can take over and answer questions now as well. Let's talk about what the landscape looked like in terms of the traders at the end of the 12 weeks of the Thailand mentoring program, and where Sean was and what he's done since. Okay. If you look at that table, and I did actually put this on some social media when we finished the program. I think I put it on Twitter for sure. We did have a couple of questions from people asking, what type of backgrounds do people have to become successful? Just look at this, guys. Sean was obviously from a finance background for most of his career, right? But look at the occupations of the other guys that were on this program over the 12 weeks, okay? And the ages of guys as well. So the guy who came top in terms of performance, percentage performance at the end of the 12 weeks on this year's Thailand program, he was 18 years old, Sam, in New York, okay? and he's a student, and his parents gave him 100 grand to trade with. So he made 39% in 12 weeks, okay? Now, contrast that to the guy who came second, Ron, 60 years old, from Wisconsin, retired, started with $100,000 in his account, made 36%, okay? The age differences from the guy who came first to the guy who came second, it's 18 years old and 60 years old. Totally different occupational and career backgrounds. Tom, 49 years old in Ireland. He's a cattle farmer, starts with 100 grand, makes 34 grand in 12 weeks, okay? Tim, oil and gas project management, starts with 210 in his account, makes 32% over a period of 12 weeks. Then we have Sean, and you can see, Sean percentage-wise was lower down in the group after 12 weeks. But what's happened since? Sean has gone on to make the most progress out of everybody. Now, why is that? We're going to get onto that in a second. But to answer this question about, what are my chances given my background and career coming on the mentoring program and making money? You have as good a chance as anybody if you just put in the work, okay? This is really the key, okay? You got to focus on the right things and put the work in, okay? So, and by the way, the 7 guys that I mentored, if you want to sum this table up, over the 12 weeks, everyone made money. And that's in a very difficult market this year in terms of making money, okay? So let's have a summary from my perspective. So you had Sean's student summary. What about the mentor summary, okay? I think Sean's, from all the guys that I've mentored in the past, Sean is actually a very interesting student case study. Why? Well, you saw when he applied and you've seen his background. He's got a lot of life experience. He's 50 years old. He's got a lot of life experience, career experience, and that's a big positive. It's going to help him in process-wise in learning the types of stuff that we teach, right? And he also attempted to trade in the past. So he's got some experience, even though it's bad experience, right? Losing money, 150 grand. But the age and experience we found over the years can also be a negative, right? So there are positive aspects to it. There's also negative aspects to it, okay? Especially if they've traded in the past, because they've usually picked up a lot of bad habits. So retail traders generally of Sean's age and trading experience over 10, 15, 20 years tend to come to us with very, very bad habits that are quite difficult for us to get rid of. And definitely in the beginning of his program, Sean basically said, I chewed him out on the Celsius trade. That's an understatement, okay? I went fucking insane on the phone, okay? Right? And the reason I did that was because we've only got 12 weeks to make you good, guys. So we can't massage you and try to, make you feel good about doing something that you shouldn't have done, right? We need to make sure you never do it again. And we need to make sure that you drop all of these bad habits that you bring to us from the past, okay? Because all of those bad habits, really what they've come from is misinformation, okay? You've all been taught shit in the past, and then you bring this shit to our doorstep, and we have to get rid of it to turn you into a profitable, professional level trader, okay? So his bad habit at the beginning was the time horizon and eagerness to trade, and really, to sum it up, it's over trading, okay? So the Celsius trade, I gave him a hairdryer over Zoom, and we got rid of that bad trait very, very quickly through tough love and obviously detailed explanations of why he shouldn't be doing it and why it's reckless, okay? And other examples of reckless things that he could end up falling victim to if he falls back into bad habits. Now, once he got that hairdryer and he dropped the bad habits, okay, what does that do? It sets the pathway for the upside in the account to occur. Why? Because now he's only got the positive traits, which is the life experience and the career experience, which gives him valuable input for the learning and the process that's required to become good at this profession. Okay. You've got to be consistent and you've got to process to a high level. Okay. So when I mean consistent, I mean you have to show up regularly every week and you have to process to a high level. Okay. So once we got rid of all that crap, we opened up the upside to his account. And then all his positive traits came out. So week by week, what it really came down to was implementing those positive traits that he's got. Okay. So sticking at it and just getting incrementally better and better each week. So the question is, with a situation like this, can you put a price on that effort? Well, yes, you can. The opportunity cost of working or not working during a program for Sean, or dropping his bad habits or engaging in his bad habits, the price, the opportunity cost is 183 grand in 20 weeks. Okay. So from my perspective, this is what I see. Okay. So very successful program, guys, for Sean. Successful program for the rest of the guys on the Thailand program overall in 2023. If you want to come on the 2024 program, I've still got a couple of places remaining. Sheki's got about 5 or 6 places remaining. So in total, we're looking at about 8 places remaining at the moment, out of the 18 that were originally available. And we're probably going to get done. Should be definitely by the end of January in terms of all the bookings. But it might even be by the end of this year, by the end of December. Like those places might go. So if you're genuinely interested in doing this, just send us a message through the website, itpm.com/trader-mentoring. As I mentioned earlier as well, we do remote programs. So if you can't make it to Thailand or it's a bit of a stretch financially, then you can book yourself on a remote program for Q1. We always get asked, what are the prices of the programs? It is price on application. If you send a message to the website and we send you that application form that Sean filled in 2022, beginning of August, so just over a year ago, he was filling in that form, you will see the prices when you apply, okay? So it's price on application. So guys, that's it for this session. I'm happy to take questions, and myself and Sean will hang around probably at least for half an hour. So we're happy to answer any questions you've got. So let me see here. So yeah, I think Daniel responding here to the slide on Sean's bad habits. Never put Anton's reputation in danger. Yes, not a good idea. Dan, amazing said, thanks for sharing. Sean, here's a question for Sean. How many hours a week did you spend on trade idea generation today and at the start of the ITPM journey?
I actually put in a lot of ideas because I like to have a nice, we call it a list of ideas that when one comes off, I can put on. So for me, normally the ITPM the process is you want to put in about 15 hours a week of work. I like to put in more. It makes me feel better, and I like to really do look through the ideas. And I love the financial markets anyway. So this is a passion. So I spend more time than that.
So Whitney is asking, what amount of capital do we need to start with at the minimum? And I'm going to answer that question out loud because there's different levels for different programs. So if you come on the Thailand program and you want to do the 12 weeks with me, you need a minimum of 100,000 in your account. If you do the 12 weeks after the Thailand program with Edward Shek over Zoom, you need 50,000 minimum in your account. Okay. If you do a remote program, it's 25,000 in your account. And part of the reason why we have these minimums as well is on the Thailand program. Obviously, the Thailand program, it includes all of your accommodation, your classroom teachings, all food and beverage. It's an all-inclusive. So we're going out to bars and restaurants and stuff during the week. You're basically getting a 5-star vacation while you're doing your program. So the price of the Thailand program is higher than a remote program, obviously, okay? And the minimums that we have reflect that because we want to make the money back for you as quickly as possible, right? So, look at a guy like Sean. What was the number, Sean? You made like 95 over the 12 weeks, 95 grand over the
95 over 12 weeks, yeah.
Okay, that's with 400 grand in your account, okay? So percentage-wise, we're looking at just shy of 25%, okay? But that, over 12 weeks with 400 grand more than covers a program, like ridiculous amount in terms of covering the fee for the Thailand program. $100,000, you saw the guys, the 12 weeks where they were making like 39, 36, 35, 32%. The majority of guys covered the cost of their program even in the 12 weeks. Here's a question, Sean, from Daniel. Congratulations on your performance. When a trade was going against you, once you launched the proper structure, what was your first reaction before and after the mentoring program? So before the mentoring program, when a trade goes against you, why is it different than when you've done the program, I guess?
Gosh, before the mentoring program, I would have gotten despondent, and it's like, why isn't it working? And if it was of any size, I mean, you'd get seriously depressed. But as I showed you guys on the equity curve, I showed you exactly where the drawdowns were happening. That's part of the process. The other good ideas continue to lift over. Remember when we went over? Down and then higher, down and higher, down and higher. That's write off and then good ideas, write off and then good ideas. So just continue to follow the process, and you recognize the write-offs are just part of the business.
There's a question here from Jit. Brilliant session. What is the difference between online and Thailand programs? Well, online is also enough to start with. Okay, so obviously, there's a big difference between doing mentoring programs and just doing online programs, okay? So online programs, you're just purchasing online, the online programs. So IPLT, PTM, POTM, and you're completing them in your own time, okay? Now, if you do a mentoring program, all of those online programs are part of it, and you need to do those before you go on the phone on Zoom, right? And we got remote and Thailand programs. And remote is 12 weeks over Zoom with a mentor. Thailand is you fly over to Thailand. It's me and Edward Sheck teaching you in the room, and then one of us teaching you for 12 weeks over Zoom. Now, your question is are the online programs enough? Yes, they are. We have very high success rates with people who take our online programs, open their trading account, trade with real money, and make money, okay? You saw Sean himself when he came into ITPM in 2020, and he said in his presentation, he'd only taken the online programs, he started trading, and he was up like $20,000 in his response in the application. But I remember you saying you were actually up a bit more, like by December.
By the end of the year. By the end of the year, I was up 36% annualized.
Yeah. So he was up like 36% from just taking the online programs. So we do get a lot of success with people who just do the online programs. Obviously, mentoring programs are different because the guidance, we're very, very involved one-to-one. Okay, so we're kind of shortcutting your success. And there's definitely things on the mentoring program that we do that is not in the online programs. Why? Because we do more sophisticated things. Because you can be supervised to do it. And when you're supervised to do it, you're not going to do stupid things when, for example, you're trading a complicated options book where you've got multiple structures on, and you're going into an expiry, and you've got winners and losers, and you trade incorrectly, right? To do that stuff, it's quite complicated, and you need to be supervised. And the more advanced stuff that requires you to be supervised can't be taught in a video series. So the video series is like absolute entry level for ITPM standards, but compared to what's out there in the rest of the world, it's way more advanced. Just the online programs is way more advanced than anything else that's out there, okay? So yes, you can just do online programs and have success. But if you want super crazy success, get your head down and do a mentoring program.
Oh, yeah.
Like Sean is absolute testament to that, and the rest of the guys on the program this year. Whitney again, if we begin with the online program and decide we want to level up to the Thailand program, can we do that later and pay the difference? Yes, you can. But it's not the exact difference, okay? So we assign a value of $1,000 per online program to the price of a mentoring program. So yes, you can do online programs. And for the online programs, we do have a discount program on at the moment called the Holiday Season Discount Program. We'll get that out to you by email. So there's like 35% discounts on the online programs for first-timers and alumni. We'll get that out to you. But yes, you can do the online programs. And once you subscribe to an online program and take the exam, that means you can come back at any time in the future and upgrade. So you can upgrade to another program, a mentoring program, a remote program, or a Thailand program. And you can come back in 2 or 3 years to do it. It's fine. Everyone moves at their own pace. I mean, you saw Sean, right? Sean started in 2020, and then he upgraded to a mentoring program in 2022, and then started his mentoring program in 2023. So his entire journey through ITPM right now has been 3 years. Andrew, we've got an alumni here who's done a mentoring program. Hi, Sean. Just wrapped up my mentoring with Jason. Totally worth it and always trying to learn more. Do you prefer to scale into your positions or go to full position size from the start? So that's a bit of a rule-based question, right? It depends on the situation, Andrew. Like, there's no one situation that fits all scenarios, right?
And also depends on certain stocks, right? If they're very expensive and the contracts are very expensive, it's kind of really hard to break those down. So you're forced to buy fewer contracts and all of them in the beginning. But if it's like a 400 stock contract position, you can kind of scale into it.
I think this is more of a question for me, Sean. Miguel, at what point during the program did Sean become proficient enough to put trade ideas on by himself without Anton's supervision? In the first 4 to 6 weeks of the program, definitely required more supervision. And then it started to get better after like 5-6 weeks, whereby by the end of a program, I was quite happy for him to choose the structures and put trades on if he wanted to. But still giving guidance, obviously, but much less towards the end. So by call number 8, 9, something like this, Sean and even like the rest of the guys were competent enough to be able to do that. Most of them. I'm looking forward to taking my mentoring program, and I'm based in Eastern Europe. What mentor would you recommend for me to choose in order to have the same time window? The time window doesn't matter. Like, our mentors are in every time zone, but if you're in Europe, any of our guys can speak to you. So the time window is irrelevant. The only time zone we have a problem with is For example, if you're based in Australia or New Zealand and you want to speak to Ben, for example, as a mentor in Los Angeles, like the time zones are too messed up. Or vice versa, if you're based on the west coast of the US and you want to speak to Anthony as your mentor in Australia, too messy. Apart from that, anyone's good. Here we go. Sean, here's a good one for you from Ash. How did you get rid of the burden, in quotes, burden, of prior experience of trading crypto and Forex? Or is it an advantage?
Well, okay, I guess you can look at things from different ways. So I guess the burden can be an advantage in the sense if you recognize it's a weakness, you're able to set it aside. And one thing I learned is literally if you want to become an expert on something, you find yourself a professional mentor, you humble yourself, you set aside everything you know, and you put yourself in their framework. And so that's what I was trying to do with Anton, to see through his eyes and see through his professional institutional perspective, how he saw the landscape. And I wanted to learn that. So it's really humbling yourself and putting yourself in other people's frame. Hope that helps.
All right. Let's see if we've got anything else here. Any more questions, guys? You can ask Sean direct questions about his trades, how he generated the ideas. Miguel, can you please explain again the 6-figure lost opportunity, please? It's pretty straightforward, Miguel. It's if you put 400 grand in a trading account like Sean and you make 45%, 183 grand over a 20-week period, okay? What we're saying is that during that time, he dropped his old bad habits. So first of all, he decided to do the program. He paid for it. He physically showed up in Thailand. He showed up every week on his Zoom calls and did the work every week, right? He dropped all his bad habits. He committed to learning the process properly. And in the end, his good habits came out and he learned it, right? Now, having done that, he made 183 grand. If he didn't do that, so even step one, not doing the program. But let's say he did the program and he didn't follow through with all the other stuff. The lost opportunity is the money he made, which is the 183 grand, okay? So it's pretty simple. Adomas, why were write-offs so big in the 90% category? Yeah, because when we go into a trade, Adomas, long call or long put option, the stop loss is the amount that we're willing to put on the trade, okay? So we typically run them all the way to expiry. Now, why does that work? And why do we come out still making money? Because we're doing other things in the account as well. We're not just writing off trades that go wrong. We're writing off trades and doing other stuff, right? So the other stuff is taking profits on winners. So let's say you have a write-off that's $20,000. So now we're talking like Sean's size account. Let's say you have a write-off that's $20,000. Your winners can be $30,000. Okay, so your R score is 1.5. But we're also doing something else. We're probably booking $10,000 to $15,000 worth of credits in the account as well. So in a month, you're booking a $20,000 loss on a write-off, $30,000 on a winner. So that's 10 grand. And then maybe you're adding another $15,000 in credits, right? So you're having a $25,000 month, okay? So that's the reason it works. And some people might ask, why do you do that? Why do you run a long option, call or put, all the way to expiry? Why don't you just cut it for like 50% loss? Okay. Well, it all depends on the situation, right? But most of the time, when we go into the trade, and we're talking the vast majority of times in the 90 percentile, right? We're happy for it to be a write-off if we're wrong, okay? Because you think about the alternative, which is you've done all the fundamental work. You really think the stock is going to move, let's say in this scenario, up. You've got a call option at the money that you're left with in your account, and you've got 2 weeks, 3 weeks till expiry, and it's slightly out of the money. But the value of the option is down, say, 25% from where you bought it, right? Maybe a month before, okay? Think of the alternative situation. After you've done all that work, you trade out of it, and then the stock fucking moons. Imagine that scenario, okay? Imagine you're right and you didn't make money out of it. In fact, you lost money out of a situation where you were right. Okay, that's a cardinal sin in trading. You lose money on a trade that you ended up being correct on. That's terrible. That's the worst thing that can happen to you in trading. That's worse than just being wrong, right? So when we go into a trade, we are happy to make a bet where we say, okay, the long side of this trade, we are happy to lose this amount in that month. So we know it can become a write-off in that particular month, right? And we're happy to accept that risk. We're happy to accept the write-off risk. That's our stop loss, right? We've got lots of other positions in the account that can be winners. And again, Sean was pointing out about staggered expiries, right? We only have a certain amount of risk each month when we go into an expiry. So we know what the outcomes can be each month from the outset, and we know how to manage those outcomes. That's called managing the business. So all of this stuff is like managing the business is the stuff that you learn on a mentoring program like the Thailand program, because it really needs supervision. It's advanced stuff, right? Loader, do you ever get assigned on the short trades? Sometimes, but very, very rare. And if it happens, we trade out very quickly. So you end up with, the thing is you've got two sides of the trade, right? So you end up with a natural hedge anyway, right? And the strikes are not very far apart. So you end up with a natural hedge on the other side of the option spread when you end up with a stock position. So you don't lose money. You just need to trade out of it and then restructure the trade. Loader, again, you make it sound as if the short trades never lose money. No, we don't. What are you talking about? Sean just went through a whole spreadsheet where he showed you lots of his shorts losing money. By the way, this is part of the magic of the positioning that we have, right? Because if you have ratio spreads, which if you'd have looked at Sean's spreadsheet, you'll have seen its ratio spreads. So you'll see that many of the ratios are like long 2 contracts, short 1, long 3 contracts, short 2. So we're always net long, right? In that situation, the calendar is shorter dated on the short, right? So if you're long 2 and short 1, and you're longer dated on the long versus the short, so you've got the shorter dated side on the short. It's a calendar spread, okay? Obviously, the difference in the strikes matters and the relative prices that you pay. But if the stock moves in the direction where the long is in the money and the short is in the money as well, you make money on the long and you lose money on the short. but overall you make money. Okay, so you're asking, is it a bad thing if you lose money on your shorts? No. If we lose money on our shorts, it's because we're making money overall. That's why we're agnostic, right? Because if you set it up whereby you're long to, let's say it's call options, it's a $50 stock, you're long the $50 strike now in December, and you're short the $55 strike in November, and the stock just goes to 70, and you're long 2 and short 1, stock goes to 70. Do you make money or lose money? Overall, you make money. Do you make money on the long? Yes. Do you lose money on the short? Yes. If the stock by November expiry is $54.99 or $55 or lower, right? Do you make money on the short? Yes. Are you making money on the long? Yes, mark to market. But you're booking the profit on the short, and then you're running the long. So until the November expiry, you are agnostic, okay? This is part of the magic of the process. So, when you say like, it's kind of like a snide comment, like you make it sound as if the short trades never lose money, but that's not true, right? First of all, we don't make it sound as if the short trades never lose money, because literally in the spreadsheet, Sean was showing you that lots of them lose money. And secondly, if the shorts do lose money, it means we're making money overall, which is obviously good, right? Jim, do you ever trade ETF or index options? Never really trade index options, but ETF options, yes, occasionally, as hedges, mostly as hedges. So Dale's asking about weekly time committed to trading for you, Sean. I think you answered that already, right? How many hours a week?
Because it's my passion, I do more than the 15 hours. So I do quite a bit more.
So what, 25?
Probably between the research, probably around 25, 30. And then, of course, there's also managing the positions. It adds up, but it's because I want to. It's not. The process doesn't necessarily require that much time.
So Lotta's come back and said, I understand, thanks. I was referring to the mentions of credits. But indeed, you can lose them or part of them. Yeah, but this is the thing, Lotta. We're agnostic, right? If we get them, great. If we don't, then it means we're making money overall, because it means the stock's moved in our favor, right? Because we got ratio spreads on, okay? So it's like, this is one of the things that you'll absolutely learn on a mentoring program, is completely being relaxed about your trading, because you're agnostic most of the time. You do not have to worry about things anywhere near as much as, for example, retail traders who YOLO trade, buy one stock or one call option. That's 25% out the money for a month out or 2 months out, and it's half their life savings, right? It's like, it's never, stuff like that never happens with us, right? Because we set things up where the probabilities are in our favor. And then once you see it for real, like Sean has seen it since the first week of May, once you start seeing the money coming in and you see how everything works, right? How you trade into things, how you trade out of things, how you manage your account, how you manage the business, how you create bookings so your equity curve keeps going up, right? When you see it, it becomes so much more relaxing, because you understand how it works. And when you see how it works and really understand it, you know you never need to worry about whether a stock's going to go up or down in the next month. Because if it does or not, you're just going to make money. Question. So we can use the ITPM process with any market. I don't know what you mean by any market. If you mean a bull market or a bear market or a sideways market, absolutely yes. If you mean different asset classes, then yes, we have different programs for different asset classes. I don't even know what that means. Go, I think your name is. Go Lee. No idea what that means. Try to rephrase the question. That's a great question. Okay. James, all this money lost by retail traders, where does it go? Does the money coming into financial markets, retail, represent a significant amount in relation to the overall size of the financial markets? Okay, first question. All the money lost by retail traders, where does it go? Where do you think it goes? Well, let's open this one to the room. All the money that's lost by retail traders, where do you think it goes? Let's have some answers. Let's have some answers in the Q&A. There's some very, very good answers here. Okay, first answer was brokers. Next one, in the broker's pocket. Next one, in Sean's pocket. in Anton's pocket. To ITPM traders, correct. To ITPM students and mentors, correct. Smart money who keep getting richer, correct. Straight to the institute, correct. Professional traders, yep. Institutional smart money, correct. Yes, guys. So all those millions of retail traders that lose money, like look at Sean's performance where he's made 183 grand in 20 weeks, okay? Like that money has obviously come from losers in financial markets, okay? So, or mostly from losers, not all of it, right? There will be winners on the other side as well. They'll overall be up. Some of the guys will be up, right? But we know that the vast majority of retail traders lose money. It's a fact, and the fact has never changed since the beginning of financial markets. So, obviously, a decent percentage of that $183,000 has come from losing retail traders in the options market, in the US equity options market. Oh dear. I mean, this has got nothing to do with Sean now. We're veering off subject, but can you explain how trading has become so trendy? That's called low interest rates, and how so many fake gurus are getting away with seemingly being really good traders, like the YouTube guys with Lambos and mansions. Again, that's called low interest rates. When interest rates were basically zero and the Fed's printing trillions of dollars over COVID, everyone's a fucking genius, right? And then when rates normalize and the market goes down, all of those guys get found out, and they're still in the process of getting found out. It's continuing. Alexandru, how does live mentoring differ from online mentoring? So I think you're talking about how does the Thailand program differ from the remote program. But if you think about the remote program, it's 12 sessions over 12 weeks, right? And then the Thailand program is 12 sessions over 12 weeks, but you're doing 10 days in Thailand first. So the hours that you put in on a Thailand program is actually 3 times more. And also, generally speaking, you're trading with more capital on the Thailand program. So we can dive deeper into more advanced things when we're in person in the classroom. The remote mentoring program does a very, very good job. All the mentors do a very good job, and the results are really good overall. But the Thailand program just takes it to another level. Yeah, so I think this question from Dale, I can answer that one to an extent, and maybe you want to give some color on that as well, Sean. What's the end goal for Sean? I ask as he's retired. So I guess the question also is like, what's the plan with your trading in the future? So we had this conversation over the last few weeks about where things are going. And we think by the end of this year, you're going to be trading a $1 million account, right? Mm-hmm. So going into 2024 with a $1 million account. And then that's kind of like the level where you now have to start moving towards full-time. So basically, if you're a retail trader, you manage to make $1 million. Between $1 million and $2 million, as you're growing from $1 million to $2 million, you need to move full-time because it requires a full-time job to sustain that level of capital. Oh, Hubert. Anton, have you ever been threatened by the Matrix for giving people ways to escape slavery? Oh, you guys are so brainwashed. The Matrix is a fake narrative, guys. It's a fake narrative. The Matrix never went after him, okay? It doesn't exist. It was a lie. So don't try to assign too much meaning to things that you see on social media, especially from chronic, full-time bullshitters. Entertainers. Let's call them entertainers. Let's be diplomatic. And no, I haven't been threatened by anybody. I've had people try very underhand tactics multiple times to try to, I don't know, people get in their head, like fantasies that they're going to eliminate Anton Creel from the trading education industry. And then they pull some stupid moves and then they end up looking like morons. That's happened a number of times. But I'm still here. Still fighting for the retail traders. What else we got here? Anything else you want to answer here, Sean?
Yeah, somebody asked right here, for macroeconomic analysis, how much time do you allocate a week? I want to say roughly off the cuff, 5 hours at least for macro, because you've got different news points coming in on a daily basis. Not news points, but different economic releases. So I actually have whiteboards here throughout my home office where I track all of these things and try to create a picture out of that. So it does involve some time. So, maybe 30 minutes here, an hour there. All of that accumulates to maybe about 5 hours in any given week, just for the macro.
So Dale is asking again a question here. I'm intrigued as to what Anton said to you in the beating. It seemed to really help you turn things around. It's to do with overtrading. So every week when we do the phone calls, we're going through every live position with a plan, okay? And the plan in Celsius was to make an exit at certain prices and to scale out, and then just be patient. And then maybe next week we'll go back in, or maybe even the week after, right? Because we knew the catalyst as well. I think there was earnings coming up as well, right? So then Sean went off, executed what we agreed, but then did something that we didn't agree. So he went back into the trade almost immediately without a plan, right? And then we're sitting there the following weekend, and I'm looking at the realized P&L and the realized trades, and I'm like, okay, good. He traded out of the Celsius positions, he scaled out, and then I look at the live positions, and I'm like, well, what the fuck is this? We didn't even plan to do it, right? And then he's explaining to me, oh, I just decided to do it. And I'm like, what? Like, okay, take me through that decision. Exactly what you were thinking after you came out of the position, and how long it was until you went into the next position, and what work you did on the trade. And there was no real thought process behind it. So then I just lost it. I was just like, you cannot fucking do that. Like, if you do that over and over again, guaranteed you're going to lose money. It's guaranteed, because you're not thinking about what you're doing, and you're not following the process. You're deviating off the path of consistent profitability, right? And you're doing things that are reckless. So then, as a teacher, I knew from having mentored guys with that bad habit in the past, and guys of a certain age and life experience and career, that the only way to get this out of them was to beat down hard, right? So I think we spent about 20 minutes with the hairdryer on, right?
More.
Maybe more.
3 sessions.
And I knew at the moment when he said, Anton, can you please just stop shouting at me? I knew at that moment it's going to stick. He's never going to forget it. So then I just let my foot off the gas. Right. That was the moment I knew he'd never forget it. Okay, and then the rest is history. He just went on to make loads of money. And actually, like, there's obviously different ways of doing things. There's the carrot and the stick, right? And like, for example, on a trading desk, Goldman Sachs or at a hedge fund or whatever, when you have like a young graduate coming on the desk, if they did something like that, you probably wouldn't be so harsh on them to begin with, because you've got more time to mentor them. And also they don't have the life experience or the bad habits. They're probably just confused in the chaos. So you have to sit down and thoroughly explain it very slowly to them, right? That's a different scenario. But in this scenario, with a mentoring program, week 2, week 3 of a program, when Sean's already been in Thailand, in the classroom for 10 days, we've already spoken twice on the phone over 2 weeks. He knows that he should not be doing that, right? Yeah, he did it anyway. So, restructuring a trade without thinking about it, without having a plan, without running it by me first. He knew that he shouldn't have done that, but he did it anyway on instinct, right? Because he had bad habits. Luca, when getting to a $1 million account, does going full time mean working 9 to 5 on research and managing your portfolio? Doesn't have to be regimented 9 to 5, but yeah, putting in 7, 8, 9 hours a day, that's a full-time job. Yeah, so I'd say depends how quick you are at your processes and how good you are. But yeah, putting in a normal 8-hour day, but not necessarily regimented to 9 to 5. You just do the work whenever you want because you don't have a boss that you're reporting to. It's not like you have to clock in and clock out, right? You just work when you want. Theo, does ITPM teach day trading? You obviously haven't done any of our programs. So I suggest you get the introductory program where we show you why professional traders don't day trade. That's one thing that we show you out of many things. And yeah, as part of that discount program, the holiday season discount program, we'll send you this on email in the next couple of days. That introductory program is now only $130. So for $130, tiny, minuscule investment in your future as a successful retail trader. Money well spent. Should absolutely do it. So the introductory program is 10 videos, a bunch of spreadsheets, and it shows you statistically what you should be doing in financial markets, in equity markets. So in crypto, the trend is to use bots. What's your opinion about automated trading? Is Sean manual trading? Yes, it's called discretionary trading. So we're using human discretion. And our time horizon is 20 to 60 days. So there's so many variables in this time period that humans can do very, very well if you know what you're doing over that time period. If you're trading, going back to the previous question about day trading, if you're day trading against the bots in a very short time horizon, let's say minutes, hours, you're screwed. There's no way you can beat the bots. Alexandru, in the online programs, you teach not to take an income from trading. But when going full-time, greater than $1 million, I assume you would pull some income. Yes, small amount. Or do something on the side as well to make a little bit of money. You know, don't start doing stupid things like taking on liabilities that your trading account has to pay for.
Right.
So, you know, taking on a car with car payments, remortgaging your home, taking the money out, and then putting it in a trading account. And then you have to pay your mortgage at higher interest rates every month with the profits from your trading account. You know, just make sure no liabilities are linked to your trading account. And at the end of the day, guys, your salary is a liability, right? Luca, trading way more. There's a difference between Goldman Sachs pedigree and a retail trader with $1 million. We can get stuff done in an hour that it'll take you guys a week to get done. No joke. We can do many, many things at once. Okay, guys, so I think we're probably running out of momentum here on these questions. Any last questions before Sean and I pull the curtain? looks like we're done here, Sean.
Okay.
Well, guys, I hope this webinar was useful. I think I'm going to watch this back because we do record all these webinars. I think I'm going to watch this back in the next 1 to 2 weeks. And if it's worth putting on YouTube, then of course we'll stick it out there for the world to see. So watch this space. But thanks for showing up today, guys. I hope it was useful. Thank you to Sean. Absolutely killing it, making loads of money, onwards and upwards to that $1 million account by 2024. And guys, if you want to join ITPM, you'll get an email in the next 24, 48 hours with all the ways you can join online programs, mentoring programs, Discord servers. We've got a great school and a great community. If you want to join, just hit us up. All right, guys. Thank you very much. Take care. See you.
Bye.